Everyone thinks the AI boom is being funded by genius ideas, breakthrough models, and billion-dollar valuations. But behind the scenes, something much less exciting is paying for it: debt. And in 2026, companies connected to the AI build-out could borrow nearly $570 billion. That is not just a technology story anymore. It is one of the biggest financial bets in history. Because building artificial intelligence is not like launching an app from a dorm room anymore. It requires data centers the size of small cities, thousands of advanced chips, massive cooling systems, and enough electricity to power entire neighborhoods. The AI race is becoming an infrastructure race, and infrastructure is expensive. According to Morgan Stanley, AI-related debt issuance had already reached around $236 billion by the end of May. That was roughly 4 times the pace from the same period a year earlier. And the biggest technology companies are expected to spend around $700 billion this year alone. By 2027, that spending could pass $1 trillion. So the question is no longer whether AI is expensive. The question is, who is going to pay for it? Now, borrowing money is not automatically a bad thing. A company borrows money when it believes the future return will be bigger than the cost of the loan. Build a factory today. Make more money tomorrow. Pay back the debt later. Simple. But AI creates a strange problem. The spending happens now. The debt starts costing money immediately, but the profits may take years to arrive. And that is where the AI arms race becomes dangerous. Nobody wants to be the company that falls behind. If one company builds a bigger data center, the others feel pressure to build an even bigger one. If one company buys more chips, everyone else has to respond. It becomes a financial version of musical chairs, except every chair costs $10 billion, and nobody knows when the music stops. One company that shows how quickly this can get uncomfortable is Oracle. Oracle is trying to compete in the AI infrastructure race against companies with much larger cash piles. But data centers do not wait for profits. They need cash today. Oracle has announced massive spending plans, while also raising money through debt and equity. And investors are starting to ask a very simple question. Can the future revenue from AI arrive fast enough to justify the bill? And then there is NVIDIA, the company at the center of the AI chip boom, a company with enormous demand, enormous profits, and enormous cash flow. Yet even NVIDIA recently entered the bond market with a massive debt sale. That does not mean NVIDIA is in trouble, but it does show how large this build-out has become. When even the companies selling the shovels are borrowing more money, the scale of the gold rush is getting very real. The risk is not that every AI company suddenly collapses tomorrow. The risk is more boring than that. And boring risks are usually the ones people ignore. The risk is that companies build too much capacity too quickly. They borrow based on future demand. They assume customers will keep paying more for AI. And if that demand grows slower than expected, the debt does not disappear. The servers still need electricity, the bonds still need interest payments, and the bill still arrives every month. If AI revenue grows fast enough, this spending could look brilliant. The companies that built early will own the infrastructure everyone else needs. But if the returns disappoint, the same spending can become a problem. Because debt makes every business decision less flexible. You can pause hiring, you can delay a new product, you can cut marketing, but you cannot politely ask a bondholder to forget that you owe them money. So, why should anyone outside Silicon Valley care? Because the AI boom is not isolated. It affects stock markets, bond markets, electricity demand, chip prices, cloud prices, and eventually, the cost of the products and services people use every day. When hundreds of billions of dollars chase the same infrastructure at the same time, it can push prices higher everywhere else. And that is when a technology trend becomes an economic story. The AI boom may still become one of the greatest business stories ever told, but every boom has a price. And this one is being paid with data centers, electricity, chips, and an increasingly large pile of debt. For now, investors are betting the future profits will be worth it. But the bigger the bet becomes, the less room there is for disappointment. Because in finance, hype can last for years, but eventually, the numbers have to work. If you want finance stories beyond the headlines, subscribe to Money Uncovered.